Thank you for standing by. My name is Jeannie, and I will be your conference operator today. At this time, I would like to welcome everyone to the Thesis Gold's Lawyers Ranch Pre-Feasibility Study conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. I would now like to turn the conference over to Dr. Ewan Webster, President and CEO. You may begin.
Hi, everybody. Thanks for joining today. We're here to talk about the results of our 2025 pre-feasibility study for the Lawyers Ranch Gold-Silver project. This is obviously the most comprehensive technical and economic update Thesis has ever released, and I think it marks a major milestone in defining what is quickly emerging as one of the strongest development stage precious metals projects in North America. We've got some standard forward-looking statements here that apply, so I'd encourage you to take a read over these in your own time. They'll be on our website for review. But I think importantly, this PFS was completed by top-tier kind of independent qualified persons from Ausenco, Mining Plus, Knight Piésold, P&E, SLR, among others. And these groups are, they have deep expertise building projects at this level. So, I believe that their involvement gives us and our stakeholders a very high degree of confidence in the technical foundation of this study. Quick agenda for today's call. It shouldn't take long. I'm hoping we can get through this in kind of 15, 20 minutes and save plenty of time for questions and get straight to the point here. But the agenda laid out is overview of the Lawyers Ranch project, why it's so strategically positioned in my mind. Then we'll walk through the economic results of the PFS. Then we'll break down the mine plan, processing, cost structure, and production profile. And finally outline the next steps and, where we go from here, basically. On the call today, obviously myself, and I've got Charlie Nylans as well, who's our lead engineer on the project. So the Lawyers Ranch project sits in northern BC's Toodoggone district, which in my mind has rapidly become one of the most exciting exploration districts in the province. Our land package stands at just shy of 500 square kilometres. That gives us a huge amount of room for growth beyond this kind of base case scenario that we're presenting today. And because this is a brownfield development site, the infrastructure is a major advantage in my mind. I mean, we have year-round access to the project. The sturdy airstrip is just on the southern end of the Lawyers project, and only 45 kilometres away, the Kemess, at Centerra Gold's Kemess project, we have a tie-in to green hydroelectric power. And, very importantly, we also have very strong relationships with our First Nations partners, including equity ownership from Sekideni, Kodacha, and Takla Nations. And I would say that's a rare alignment for a development stage at this point. So this slide really digs in a little bit more into the infrastructure at Lawyers Ranch. I mean, you can see here there's direct road access to site, which dramatically lowers the logistical complexity and the cost. This sturdy airstrip that I mentioned earlier allows direct access for crews, consultants, and equipment coming from Vancouver straight to site or any of the northern cities. And we've got proximity to that power line at Centerra Gold's Kemess project that I mentioned, which improves environmental performance and I think long-term operating cost benefits. And really all of this, I think, contributes to the very low capex intensity that we have on the project and reduces that execution risk, especially compared to many of our other northern BC peers. But the Toodoggone itself, I think, is really heating up. I think, we're starting to see a lot of momentum in this part of British Columbia. AMARC and Freeport recently discovered the Aurora porphyry deposit, and they've been putting out some great drill results just to the south of us. Centerra is expected to release a new PEA for Kemess early in the new year. Sun Summit continues to put out compelling exploration results, and obviously our own work at Lawyers Ranch is expanding, and and not only the mineralized epithermal gold footprint near surface, but I think it's pointing to evidence of a deeper porphyry system as well. Okay, so to get into the guts of the presentation then, today's PFS delivers exceptionally strong economics, even at the conservative metal prices that we use, $2,900 gold and 35 silver. I mean, we could have gone more aggressive there, I think. But I think the project speaks for itself, and we wanted to really just allow that. And at these prices, we generate an after-tax NPV 5 of 2.37 billion, an after-tax IRR of 54.4%, and a very rapid 1.1 year payback. That gives us an after-tax NPV to CapEx ratio of 3.2 to 1, which is, very attractive. We're also boasting a very long mine life of 15 years with a very clear path to extending that as well. Very robust all-in sustaining costs, well below industry average at 11.85 US an ounce. Production's really strong in the first few years, averaging 266,000 gold equivalent ounces over the first 3 years, and it remains strong over the life of mine at 187,000 ounces. We also delivered a maiden reserve on the project at 3.2 million gold equivalent ounces from just measured and indicated resource. And the project maintains substantial engineering and exploration upside, I think, as we move towards feasibility. Now, taking a closer look at the commodity prices. I mean, this slide shows, I think, why Lawyers Ranch is such a compelling project in today's gold market. I mean, the base case is already excellent at $2,935 silver. But that said, I think, and if you look at the near spot scenario of $4,100 gold and 51 silver, that gives us an after-tax NPV5 of 4.36 billion and an IRR to nearly 88%. I mean, we were putting this together last week, and that was the gold and silver prices we were using. And, and we call it near spot now, but obviously prices have, excuse me, have run away from there. So it's are meant to be in the moment. But importantly, I think, analysts and banks now forecast gold moving towards $4,500 and $5,000 gold in the near to medium term, driven by a number of factors, I think: central bank buying, de-dollarization, geopolitical risk, declining yields. The numbers become truly exceptional if we look at this in the kind of $5,000 or $60 silver range, which we're almost there at today, and silver's performed so well over the last week. If you use $5,000 and 60, we get after-tax numbers of 5.76 billion and 108% IRR. So, in my mind, this project has strong downside protection, but tremendous upside torque. The updated 2025 mineral resource estimate you can see here, globally, we're looking now at 5.2 million gold equivalent ounces across all categories. If we break that down, it works out to 4.6 million gold equivalent ounces measured and indicated, and then just over 600,000 gold equivalent ounces are in the inferred category. Of the 4.6 million M&I, which is eligible for use in the PFS, we converted 3.2 million to proven and probable reserves. So that's a strong conversion rate. This reserve base forms the foundation of the 15-year mine life that we presented and the strong early production profile. And importantly, I think, we see a clear path for the reserve expansion through infill drilling, basically upgrading those inferred ounces and bringing them back into the reserve base. And that's going to be through underground expansion, where we lost most of those inferred ounces, and then also on the ranch project. And beyond that, just looking at district scale exploration, making new near surface discoveries. I think we've got a lot of targets that show very compelling signs that there's more to deliver here. If you look at the production profile here, I think this is one of the most attractive features of the Lawyers Ranch project is, the shape and the strength of this production profile. The first 3 years averaged 266,000 gold equivalent ounces, which is a major contributor to, the very strong payback period at 1.1 years and the IRR. The life of mine annual production averages 187,000 gold equivalent ounces, and that's supported by both gold and importantly, silver here contributes about 23% of the revenue. And I should just take a minute to almost kind of digest that. In my mind, there are so few development stage silver assets of any scale out there that, arguably, this is a real standout in my mind, firstly. Secondly, I think more people would agree that silver's got more torque than gold going forward. Certainly this year so far, it's outperformed gold, and it's in the last week, it's done exceptionally well. And third, we're going to be producing near 4 million ounces of silver a year when we get into production. That's very significant. And I think, that's one thing that's going to become very clear going forward is, how much of a basically a silver asset this is. Also, it's a smooth, high margin curve with meaningful early cash flow and long-term sustainability. Okay, so taking a look at the mine plan, during the PFS work, we completed a full review of the mine scheduling. We identified mine sequencing, I would say, as probably the most single effective lever to ultimately materially improve the project economics. And this was done through optimization work where we looked at bringing in high margin ore forward, particularly from Ranch. We increased the throughput of the mill from 12,500 tons a day up to 13,700 tons a day. And we reshaped the overall schedule to focus on the economics. And, to break those down a little bit more, the work highlighted the importance of Ranch area in the early years. As a result, that ranch ore was basically front-loaded into the first 3 years of production. Previously in the PEA, it had been at the very end of the mine life. But the grade at Ranch, being just kind of over 2 grams, really drives that forward and makes a material difference to the economics. And the underground cut-off grade was increased from about 1.5 grams to 2.2 to maximize margins. And that was the underground now is predominantly Cliff Creek and Good on the Lawyers project. And a stockpiling strategy was also adopted to optimize feed quality across the 15-year mine life. So in terms of the process and flow sheet, as I mentioned, the plant is 13,700 tons a day. It's a very conventional flow sheet, crushing, grinding, gravity, and then basically everything is floated. And then we've bleaching and a Merrill-Crowe for the silver recovery as well. The recoveries are excellent. We're looking at 92, almost 93% for gold and 81.6% for silver. We also see a favorable production split. Basically, about 85% of the production out of that very flexible flow sheet that we have is going to be 85% doré and then 15% concentrate, which kind of maximizes our in-house value creation, I guess. And, that the other nice aspect of the flow sheet that we have is it, as I said, it provides a lot of flexibility and it's able to optimize blends from Lawyers and Ranch. And, I think as Ranch continues to grow, the flow sheet is there to able to accommodate that. Okay, so to take a bit of a deeper dive now into the capital and operating costs, the initial capex is 736 million. That's up about 130 million from the PEA. And I think, largely that can be attributed to the 9% throughput increase in the mill, roughly 5% inflationary pressure, kind of across the board, I would say, on materials, equipment, etc. Enhanced water and electrical engineering, and the strategic decision to bring Ranch ore forward into year one. I think that added about 28 million. A lot of those four things are what is reflected in the higher capex, but arguably still a very, as I mentioned earlier, very attractive NPV to capex ratio of 3.2 to 1. And the PFS here also does not include approximately 90 million in pre-production revenue that's generated from the stockpiling process, which is meaningful upside that's not captured in the economics, and that is due to pre-stripping at AGB, where we're stripping for tailings, but at the same time, we're partially stripping ore. The operating costs are very reasonable at 46.53 per ton, but arguably more importantly, well below industry average all-in sustaining costs at 11.85 an ounce gold equivalent. In terms of cash flow generation, I think we've done a very good job of optimizing the project here. The base case after tax free cash flow over the life of mine is 3.8 billion. Looking at those higher metal price scenarios again, 4100 and 4135 silver, the after tax free cash flow rises to 6.8 billion. So this strong cash generation highlights how accretive, I guess, this project becomes once it's built and how quickly that capital can be returned. So in my mind, this is just a good slide here to demonstrate the re-rating potential that exists for Thesis. We trade at a material discount to our now underlying PFS valuation. Excuse me. Both on an absolute basis and I would say relative to our peer group as well. And when you compare our after-tax NPV5 of 2.37 billion to our market cap, the disconnect is quite significant. This is also true on a per ounce basis, where we trade below the average for a tier one jurisdiction gold developer with similar scale and economics. I think it'd be fair to say that we view the PFS as a pivotal catalyst for closing that gap. It fundamentally repositions the project by demonstrating a 15-year mine life, very strong early cash flow, a rapid payback, top quartile costs, and all at conservative metal prices. The study provides a level of technical rigor in my mind and engineering detail that that is relied upon, and it validates the project's ability to generate meaningful value through commodity cycles. I think this project works under a range of commodity prices, demonstrating how robust it actually is. As we move into the feasibility study and formally begin the EA process, I think the risk profile continues to drop. Each of these steps in my mind, whether it's going through the PFS and having that complete now, beginning the FS level engineering, the reserve conversion, beginning the permitting process, working on relationships with our First Nations partners, all of these things typically drive the re-rating for quality developers. So I think we therefore see a very clear sequential path for Thesis to re-rate closer to both its NPV and its other kind of tier one peer group as we continue to de-risk and advance the project. This slide here remains largely unchanged, I think, from anybody that's familiar with the deck or that's actually been to site, for example. The slide here shows three main pits at Lawyers, Cliff Creek, AGB, and Duke's Ridge, along with the waste rock storage facility, the tailings, and the mill. And I think one thing that's very apparent here, and particularly if you've been to site, is that the layout is compact, it's efficient, there's limited haul distances, it minimizes the environmental footprint, and ultimately I think all of us just comes together to simplify operations. It's an efficient site layout with clear operational advantages. And I've stressed this many times before as well, but I think you can also see here from the topography that the subalpine plateaus with large broad valleys and very limited vegetation again lend itself to operational advantages. Not to mention we're in the rain shadow of the coastal mountains, get very little precipitation in the winter in terms of snowpack. So very feasible to build and operate a mine in this part of British Columbia. Okay, so before I dive into the next steps in the timeline, I think I really would just want to emphasize that 2025 has been I would say a transformational year for Thesis Gold. Centerra came in as a 9.9% equity shareholder. There's very clear synergies there in the district as well that are worth exploring. We've completed and executed a very successful field season. Our First Nations partners made an equity investment in Thesis and are now shareholders. We've had two major banks launch coverage on us this year, National Bank, Scotiabank. We've materially strengthened our leadership team and board to help with both operational and financial execution as we continue to really drive the project forward. And, we're now closing out the year with a truly exceptional PFS. So I'm really looking forward to 2026, when we sink our teeth into beginning the feasibility work and also getting cracking on the EA, which I think, by the end of the year, I'm really hoping that we're going to be able to file that initial project description and formally launch the BC and federal environmental EA process. I think our goal is to complete the FS level data collection in 2026. So that's a combination of the geotech, geochem, hydrogeology, metallurgical work, and that all feed into detailed engineering through 2027. At the same time, we'll submit the EA application and move towards an EA decision in late 2028, early 2029 is the timeline that we're currently working on. I think at Thesis, we're all very aligned to continue de-risking the project in parallel with the engineering, but in addition to Indigenous regulatory engagement. Okay, so I just want to thank our team, our consultants, our First Nations partners, and everybody for their contributions. This PFS is a significant achievement for Thesis, and we're so excited to continue advancing this project together, and really looking forward to delivering another strong year in 2026. So, thanks everybody for your time, and I'd like to open it up for questions.
Thank you. We will now begin the question and answer session. If you have dialed in and would like to ask a question, please press star one on your telephone keypad to raise your hand and join the queue. If you would like to withdraw your question, simply press star one again. And your first question comes from the line of Ovais Habib with Scotiabank. Please go ahead.
Hi, Ewan and team. Congrats on releasing a robust PFS with Lawyers Ranch project. Really great to see these numbers. A couple of questions from me, just starting off with the optimization work that's ongoing. You talked about pre-concentration, crown pillar recovery, pit geotechnical optimization. Now, all of these will be included in the feasibility study. In regards to the mine life extensions, is the focus of your 2026 drill program going to be more infill, more extension drilling? And also, will there be a resource update that will be presented to the market before the FS is released?
Hi, Ovais. Thanks for those comments. That's great. I think it's a balance. I think we're not actively trying to grow the resource base. I mean, I think, some of those critical inferred ounces that we lost, we will try and pull back in where it makes sense, where they're going to impact the economics early on in the feasibility study, where there'll be, early year ounces that will have a material impact, then definitely. And I think some of those will be at Ranch, some of those will be from the underground. But as I said, it's a bit of a balance because drilling deeper holes at Lawyers where there's 650, 700 meter holes to infill, 3 to 7 meter stopes. Arguably, you get better bang for your buck. I think if you're drilling 100, 150 meter holes at Ranch and trying to make, near surface gold discoveries that could potentially be high grade and therefore have a bigger impact in the early years in a mine life. So I think you see a balanced approach going forward. And then I've already forgotten your second question. Remind
Oh,
me.
it was just basically, would you be providing some sort of a resource update before the feasibility study is released?
I think you will see that before the feasibility, yes.
Perfect.
Because all of the drilling that will go into that will happen summer 2026, and then you'll see, I guess the tentative timeline right now for the FS is late 2027, so you would see an updated resource, long before that.
Perfect. And you're obviously going to be releasing exploration results in the meantime as well.
Indeed, yeah, still results to come for this year's drill season, so yeah, very much looking forward to those as well.
Sounds good. And just one more quick question. In regards to Centerra looking to release a PEA of Kemess in Q1 of next year, what kind of conversations are you having with Centerra kind of going into that PEA and I guess, just for the future of the area?
I think just around, what the potential synergies of Kemess could be. I mean, is it feasible that we could potentially process material at Kemess? Would there need to be any changes to the flow sheet? Does the road between us and Kemess, what the potential tonnage we could haul on that road might be? I guess just looking at things like that at a high level and, yeah, I mean, I think really that kind of sums it up. Like, what are the operational advantages of being near Kemess and the potential synergies for both companies?
Got it. That's it for me. Ewan, again, congrats on this PFS, and thanks for hosting this conference call as well.
Great. Thanks, Avais.
Again, if you would like to ask a question, press star, then the number 1 on your telephone keypad. There are no further questions at this time. I will now turn the conference back over to Dr. Webster for closing remarks.
Thank you, everybody. I really appreciate your time today, and wish everybody a kind of festive holiday season, and looking forward to 2026.
That concludes today's conference call. You may now